I used to win trades followed by a loss after a loss in the market, leading to frustration and loss of emotional control that just messed up my good trading. But then I changed something in my system to eliminate my losing streaks and hold on to my profits consistently. In today's video, I'm going to share that system with you. Big news as well, if you haven't already seen it, Trader Missing Pieces Season 1 is out right now. And we have a brand new video dropping this Friday as well. Also, now the Discord is also active for any of you guys that are already members. In there, we have all of our resources. We have our goal setting videos and the bird's eye view plan. And we got our daily session talk in there, which is where we're seeing all of these testimonials that are on screen right now of traders getting into exactly the same trades and seeing the same direction and intention, all from understanding the Trading Missing Pieces course. Most of the time we find that traders are so close to being consistent. Sometimes all it takes is that last piece of the puzzle before you can bridge that gap to consistency. In this day and age, information is so important because you don't know what you don't know. So today, what I'm going to do is take you through two really key important parts of any system out there that you can use to improve your trading. I'm going to break it down so it's extremely easy and simple to understand. And this is the key to trading consistently. So let's get into the video. So on the charts right now, right, what I'm going to do is take you through a mechanical set of rules which you can use to understand two different scenarios within the market. So here we have a trend, right? We have our A to B continuations here to the downside. Here, again, if you want to understand how to read a trend versus a range versus an initiation, you need to watch the Trader Missing Pieces course. But here we see a bearish trend. Now, a lot of traders look at this and they say, right, this is my A to B point here. What I'm going to do is look at premium and discount. I'm going to find some imbalance here, or I'm going to look for a sideways range. If you're an NJT trader, you're always going to look for a sideways range to play from. And when price gets back up into here, I'm going to play that as my mitigation and continuation phase to continue this bearish trend, right? So what's the rules here? Rule number one, trend. So let's write that in. Rule number two is how you're going to look for your reaction points, which is from a sideways range or imbalance. If you trade imbalance. I don't trade imbalance personally, but I know a lot of guys out there trade imbalance, so I'll leave it on there just for you guys. Number three, execution, right? This is the most important part. So how you're going to execute the trade. Are you going to trade based off a reaction? Are you going to trade based off a candlestick? Or are you just going to leave a limit order on there? So again, all of these are open to you, whatever you decide that you want to do. For the purpose of this video, we're just going to stick with candle reaction. So this is our simple strategy, right? This is what we're going to use to identify trading opportunities that are high probability that we can play as continuations to the downside. So let's go on to our charts right now. So we see if we zoom out first, obviously we need to understand direction. So this is what RAMC is all about. Sideways range here, where orders are stacked. Initiation here to the downside shows the intention for lower prices. When we pull back into this sideways range here in the future, here, we can see that we get the mitigation phase here, and now we're in the bearish continuation phase that price is going to look to target this low down here for that continuation to the downside. So now we have our understanding. We're at that point of mitigation. Now we're looking for our selling direction. So let's utilize our strategy now. So again, what we're going to look for, we're going to look for trend first. So let's identify the trend. Here, we're looking at those lower highs and lower lows in the market, and we're seeing that price is in that continuation structure. So let's take it back to this point where we come into the session and we're in that bearish trend. So now what are we looking for? We're looking for our A to B point here, so we can look at our premium and discount, and we're looking for a sideways range or imbalance. Now at 50% here, if you trade imbalance, then you've got an area between this low to then this wick that we have down here, and this will be your area. Essentially, you're looking for that trend continuation to happen from. So that's our number two within our rules. And this is what trading's all about. It's literally about just creating rules and following the rules. Now, I'm also going to go through one other part, which is extremely important to trading a system consistently. Let's say you're waiting for price to get up into this area. Now, this is how the majority of traders think. And the reason I understand how the majority of traders think is because I've been trading for 10 years. I know every single problem that you're going through. I know every struggle that you have. I know all of your desires because I went through exactly the same scenarios as you are. There isn't a problem that you're going through that I haven't already been through myself and overcome. So in this video, I'll also teach you exactly how to overcome all of these problems and give you that step-by-step process that anyone could follow. So price is coming back up into this location here. We come into our 50% area. Now, this is where we want to be looking to execute again on our candle reaction. Now we can see that we've got that reaction here in the candle as well. We see the wick at the top. So most traders are just going to take that as their reaction right there. They're going to put their stop above the imbalance. Sometimes people put it above the candle, playing that as a continuation here to the downside. Now, in the execution, this is the most important part right here, what we're about to talk about right now, because this is the difference between a consistent trader and an inconsistent trader. A consistent trader is following the rules of execution. So we have rule 1, we have rule 2, and we have rule 3 all in play right now. The only thing I need to do is execute when price gets into my area with a reaction, exactly like what we've got now. Some traders, when price gets into this location, they start to think, they start to overthink. Should I wait for more? Is this a proper reaction? Maybe I'm going to trade it different today. These are inconsistent thoughts. And the reason that they're inconsistent thoughts is because you're not trading your system in a consistent way. It's not just about having rules of 1, 2, and 3. It's about how you trade those rules consistently. That is what creates consistency. It's not just, I have a trading plan and I follow my trading plan. It's I have a trading plan and I have processes of how I trade that trading plan. And these processes that I use always stay exactly the same every single time for me to get into the market. And I execute all of these trades in exactly the same way as my rules tell me to do. It's really important to understand how you trade your system consistently. Because if you have your mechanical set of rules here, which we've just gone through, which is very simple, we've just created them out of thin air here that are going to be high probability. Creating high probability rules is not difficult, but executing on those rules the exact same every single time is everyone's problem in trading. So what I always do with my system and what I always tell the guys in NJT to do and what I always preach about is trading your system using the same processes so that any scenario that you come into in the market, you're always going to execute your trades exactly the same every single time. And what that's going to do for you over time is give you confidence knowing that you can trade these set of rules in exactly the same way through any market conditions out there, and you're always going to have consistent results. And that's where all your confidence lies. So let's go back to our system here. So the inconsistent trader is going to look at this and start to think. Now, the consistent trader knows how they execute their system. They have their processes, their rules are in play. The only thing they think about in the moment is execution, flawless execution of their rules every single time. This is the only thing I think about when I see my setup. My setup's in play, it's 3 seconds before the close, and I execute the trade. That is all I think about. And as soon as that's done, it feels amazing because I know that I've executed my system perfectly. So let's continue, right? So we've had this reaction here. The consistent trader knows where to put their stop loss, knows that this is their execution, it fits their rules. Let's say you execute at market, and let's say you execute on the candle close. Then 3 seconds before the close, you execute the trade with the safe stop loss, and now you're in the trade. So let's play it forward. So you get the reaction here. If you entered late here and you start to see price moving to the downside, a lot of traders will just jump into this here because they think that price is going to continue and they think it's gone without them. All of these emotions start coming into your trading. And this is, again, how you create inconsistent results from your trading. So let's go back to the consistent trader. So here we see the reaction, and then what does price do? We get taken out of the trade. This is not a bad thing. If you've executed that trade perfectly, you've done exactly what you need to do in the markets. If you've executed that trade late with your stop loss in the location it's not supposed to go, that is not a good trade. It's exactly the same setup, but how you execute the trade is really important. So let's continue, right? Price ends up continuing here to the downside. And obviously we got taken out of our trade here and price ended up seeing continuation. We ended up actually creating a sideways range, which we actually knew was going to happen here. with the price delivery that was created. Any of you that have watched the range video in Trading Missing Pieces, you would have been able to identify that very, very easily. Now let's continue, right, into the next day, because now all we're doing is just looking for our setup again. So let's continue. So price ends up continuing there to the downside. Then what do we see, right? Here, let's take it back a second. So same rules, right? We can again use our RAMC. We've got a range here between the candles, range, initiation, mitigation, and continuation phase. So we know that price is going to target this low here to the downside using our RAMC method. Now, all we're thinking about is our rules. Trend, right? So now we're looking for continuation. So we've got our A to B, price has pulled back into that point of mitigation, and we've seen price break structure here to the downside, showing our intention for lower prices. So again, we've got our A to B continuation, which is our trend here in the market. Now, second thing, sideways range or imbalance. So at the 50% area, again here, what do we have? We have a representation of a sideways range in the markets. So we already know this is our location here in this sideways range that we're going to be looking to take our trade in the future, following our set of rules. Now, number 3, candle reaction. So, like I said, if you're going to be using a candle reaction, again, some people are just going to use this as their limit order here and put their stop above the high of the range. That's absolutely fine if you want to do that as well. Just make sure you keep it consistent. If we're following our rules of a candle reaction, we want to see a strong rejection at this point. Then we're going to put our stop above the range high and play that as a continuation here to the downside. And we're always targeting a minimum on the 15-minute of a 1 to 2.5. Again, if you want to play continuation into the low, you would have had a potential 1 to 3. But let's keep the rules consistent. So here, our 1 to 2.5. So we're using exactly the same rules to get involved in the trade. We've seen a strong rejection of higher prices here. We've waited for it to close. 3 seconds before the close, we execute the trade. Keeping the execution consistent on every single trade. It doesn't matter that we've just lost the trade up there. That is a part of our probabilities. That is a part of our system. You have to get comfortable understanding that you are going to lose trades. You are going to win trades. What makes you profitable is executing on the rules perfectly and trading your system in exactly the same way every single trade, regardless of whether you won or lost. And we use a very simple process inside NJT called the 10 series. And that 10 series focuses your mind not on a single trade, but on 10 trades at a time, so that you can just tick off executing all of these 10 trades absolutely perfectly every single time, and then see the results of your 10 trades. That gets your mind focused on trading in probabilities. The same way that a casino plays the same hand of blackjack. They don't care that someone's won a hand of blackjack. They know the odds are stacked in their favor, which again, for us in trading is our rules. The rules create the odds that are stacked in our favor. So they know that over a large enough sample size, they're always going to come out a net winner. That is how probabilities work. For us, if we take that same concept, our rules are the 3 rules that we have on the screen right here. How we execute the trade absolutely perfectly is how we guarantee that those rules are going to work over time. And our risk to rewards being positive is how we guarantee that we're going to create positive results over a series of trades. Because when we lose 1%. If we win 2.5%. So with a 40% win rate, which following a system like this is not going to be hard, all you need to do as a trader is focus on flawlessly executing your system. So let's go back to our example, right? Same rules as the one that we had above. Here we see our reaction. We enter the trade 3 seconds before the close. And again here, we get the reaction. A lot of traders at this point, they might see the strong rejections of lower prices. They might start worrying and thinking, oh, the trade, will it play out? Will it not? I'm not really too sure. My mind, it doesn't even go there at this point, because I've done exactly what I need to do. I let the market just play out, let it do what it wants to do. So inconsistent traders, they'll try and move their stop above the high to reduce the loss of the trade. They try and micromanage the trades. They overthink the process that they don't control. Whereas I put all my thoughts and my energy into the process that I do control. So here we see the reaction. Again, there's nothing for us to do. We get a continuation to the downside. And this is a trade that ends up hitting take profit. Again, exactly the same rules. Here we took a 1% loss. We executed our trade exactly the same here again as we done before. And then we hit take profit. Again, this is hypothetical, right? But this is just showing how using the same rules, executing the trade in exactly the same way, will give you consistent results in the market. If there's any keys that you take away from this video today, it is not just about having a set of rules, it's also about how you trade those rules consistently. That is the difference between an inconsistent trader and a consistent trader over a series of 10 trades. Make sure you leave a comment down in the comment section if you learned something today about how to trade consistently. I'm teaching how to trade my mechanical M15 strategy every single Tuesday during our webinars. We just had one last night that I've just uploaded. And if you want to learn how to read the markets correctly, read price action, understand the fundamentals that you can take to any currency pair, any crypto out there, any stocks, and be able to read the market intention and execute trades at good locations, make sure you check out our Trading Missing Pieces Season 1. We're going to be continuing to add to that course over the next few weeks with everything that you need as a trader to set yourself up for success. Thank you guys for watching. Make sure you leave a like on the video and I'll catch you on the next one.